Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. A quick disclaimer before we do begin: the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry, I'm here to help you come through the markets the right way. We are in the spirit of celebrating 15 years of providing the best services to you, the traders, and as a result, we do have a few promotions that I would want to take you through, starting off with the pure gold giveaway, whereby we've just launched it recently. And if you do go over to your promotions on the HF website, let me look at it now. Starting with the first five, this one is going to end in the next 13 hours. By the time it reaches midnight, we are going to conclude, whereby there's a 325,000 Kenyan shilling prize pool, and it will go to five lucky traders, whereby it wasn't only a marathon, it was a sprint, whereby speed was always everything. The first one to trade was the first one to win. And five traders are going to go home with 65,000 Kenyan shillings each by midnight today. Very interesting to note about that. Now, going over to the next promotion, we do have Battle of the Elite continuing on, whereby you can become Kenya's Dawn or Bees, claim the crown, win 650,000 Kenyan shillings, which is equivalent to $5,000. Number two is going to walk home with $2,000. Number three is going to walk home with $1,000. We are going to have 10 lucky winners in the lucky draw who are going to walk home each with $200. Now, how do you join? Go over to your HF promotions, Battle of the Elite, and join the promotion. Open a Battle of the Elite trading account and deposit at least $100, which is equivalent to 13,000 Kenyan shillings. Trade any asset and rank in the top three traders by percentage-wise of profit gain to win a cash prize. We're also going to have 10 lucky winners in the lucky draw, going to walk home with $200 each. Trade 10 trades and 2 standard lots to qualify for the lucky draw. Now, this is very interesting. We have just launched the pure gold giveaway recently. It did start on 8th of September, and it's going to conclude on 8th of October. We do have 19 days, 2 hours and counting for you to stand a chance to win 10 grams of pure gold. Now, set your target, hit it, and win it. We are going to have unlimited winners on this promotion that we are currently running at the moment. And how do you join it? Once again, very simple. Go over to your HF promotions pure gold giveaway and join the promotion. Trade 100 standard lot size in gold using any account type, hit the target and win once again 10 grams of pure tangible gold. As in the spirit of 15 years celebrating the markets, we are also going to start a new promotion, which is going to start on the 1st of October, and that one is going to be even bigger to celebrate you, the traders, for making this possible. Now, today is a very special day, once again being provided for by HFM. And we usually start with the economic calendar whenever we are looking at our morning market call. This is the place whereby you start generating ideas from. If you wake up in the morning, what are you going to look at? And the economic calendar on the website, it is provided for under tools and education, news and analysis. You do have the economic calendar, very beautiful website whereby you can see the information and plan your day even before it does begin. Now, today in the morning was very interesting, whereby we did see quite the activity being released. And if I can just click on my filter here to highlight the information that currently isn't visible, whereby in the morning we did have a lot of data coming in from the Asian region, starting off with the New Zealand, who did have their trade balance, did come out actually negative at negative 1,185 million. Very interesting to note how they're importing more than they are exporting currently. At the moment, you can see the imports stand at 7.12 billion. The previous number was revised from 7.28 billion to actually 7.27 billion. And then the exports will stand at 5.94 billion, which is a drastic drop from the previous number of 6.71 billion, which was revised down to 6.56 billion. Now, looking at it, New Zealand are importing more than they're exporting currently at the moment. But looking at it seasonality speaking, this is the time whereby the New Zealand dollar tends to strengthen as a result of tourism in the region, perfect climate, good places to visit. Tourists are flocking into the country, meaning foreign exchange is going to be transacted in the country. Let's say, for example, tourists, they are going to come from various countries. They have to convert their local currency into the New Zealand dollar for them to spend their holidays in New Zealand. And as a result, you're going to have more New Zealand dollars. So looking at it seasonality speaking, the New Zealand dollar currently at the moment is the perfect time. Now, later at exactly 2 a.m. in the morning, we did have Japanese yen releasing quite an amount of data, but the most important one did come out at exactly 6:47. This is Nairobi time, whereby Bank of Japan did release their interest rate decision, whereby the previous number was 0.5. We had a consensus of 0.5, and the actual number did come out at 0.5. Now we want to look at this information and look at why did they come up with this number. Now looking at Japan, we did have the Prime Minister Ishiba resigning recently when he just concluded the trade deal with the United States of America. And we were looking at, okay, who could come into place, who could affect the markets in the near future. And we wanted to look at the interest rate decision and look at, okay, Japanese yen has been very interesting, whereby it is an economy that does export more than it does import, meaning looking at it from a seasonality speaking, ever since 2020, they have been having interest rates negative. Just last year, they did increase their interest rates from negative into positive, whereby we did see unwinding of the carry trade, and the Japanese yen did gain a lot of strength in a short amount of time within that same period. Now, looking at it currently at the moment, we do anticipate Bank of Japan to increase rates, but by how much or when are they going to do this? This is what we want to digest. Now, when you go over to your HF website under the title, if you do click on the title, it's going to bring a short description of the news release. If you click on the read official report, it's going to open a new tab, and I want us to look into it. So if you click on the read official report, it's going to take you to this page. Now, this is a government website. You can see it's BOJ. Bank of Japan essentially, and they do update their information here. Now looking at it from the most recent meeting, which was today 19th, if I do click on the PDF, it's going to open a document that supports the Bank of Japan's decision. As you can see, the document is dated September 19th, 2025, and this is the official government document that was released today earlier in the morning. Now, looking at it, at the monetary policy meeting held today, the Policy Board of Bank of Japan decided by a 7-2 majority vote to set the following guideline for money market operations for the intermeeting period. Now, with regard to ETFs and Japan rates, the bank decided by a unanimous vote to sell these assets to the market in according to the fundamental principles of their disposal, which include the principle to avoid inducing destabilizing effects on the financial markets. The scale of the sales will generally be equivalent to that of stocks purchased from financial institutions. Now, Japan's economy has recovered moderately, although some weaknesses has been seen in part. Overseas economies have grown moderately on the whole, although some weaknesses has been seen also in part, reflecting trade and other policies in each jurisdiction. Exports and industrial production have continued to be more or less flat as a trend, although there has been some front-loading and subsequent reactionary decline due to the increase of US tariffs. Now, when Trump did take over power earlier this year, he did enact a bit of tariffs. Now, when you look at Japan, they do produce a lot of goods. As we have said, they are a net exporter of goods in their country. Now, the United States are a big consumer. When you look at Toyota, basically Lexus, when you look at Honda, when you look at most of the companies that produces goods in Japan, the biggest consumer technically is the United States of America. Now, when the tariffs were enacted, we did see the banks, institutions, everyone became a bit uncertain about what could happen, because all of a sudden the goods and services that we were buying at an X amount of price will be taxed even more. Now, at the moment, importing companies are still bearing this cost. The cost have not yet been reflected onto the consumer. But could this change in the near future, whereby these costs will start being passed on to the consumers, which will reflect into higher prices overall, affecting prices of goods and services in the near future as a result of the tariffs. Now, corporate profits have remained at a high levels on the whole, although downward effects due to tariffs have been seen in manufacturing businesses. Fixed investment has been on moderate increasing trend. Now, if you go through the data, one thing I would want us to go through is how they are planning to offload the ETFs and the rates that currently they have been purchasing for quite some time. Now, the Policy Board of Bank of Japan changed the monetary policy framework, judging that it's within the sight that the price stability target of 2% will be achieved in a sustainable and stable manner. Now, this is one of the main mandates of a central bank to maintain inflation in between the 2 and 3%. As part of the change, the bank decided to discontinue purchases of ETFs and Japan real estate investment trusts. Therefore, the bank has considered the details of the disposal of these assets. How are they planning to do this? Based on the fundamental principles, at its experience of the smooth conduct of sales of the stocks purchased from financial institutions, the bank decided to sell its holding of ETFs and rates for the time being at a scale generally equivalent to that of the sales of the stocks purchased from the financial institutions. Now, the sales amount to about 0.05% of the trading values in the market. Now, number one, the bank will sell ETFs to the market at a pace of about 330 billion yen per year based on the prices formed in the exchange market. Now, number two, the bank will sell rates to the market at about a pace of 5 billion yen based on the prices formed at the market. Number three, and at the pace of the sales described above, the bank will sell each ETF and rate at the amount approximately proportionate to the share of each asset in its holding, with consideration to spreading out the timing of the sales. Now, the sales amount is based on book value. Currently, at the moment, the amount is at 620 billion yen as per the end of March 2025, which is roughly equivalent to the annual sales amount of the stocks purchased from financial institutions. Now, the bank will select a trustee who will conduct the disposal of ETFs and rates. The disposal will begin once necessary operational preparations are completed. Very interesting to note what Bank of Japan are going to do. Now, when you look at these rates and the ETFs that we're talking about, the Japanese Bank of Japan started buying these rates since 2004, and they bought more into 2010, 2011. Now, currently at the moment, when you look at forex participants, the number one forex participant is the central bank. They would want to invest. If you look at what Kenya currently at the moment want to do, they want to sell shares of Safaricom that they did buy initially. They have appreciated in price and they want to recoup the money. The same could be said when the Central Bank of Kenya wants to offload a lot of shares, nearly 50% of Kenya Pipeline Company, and this is going to bring a lot of money into the Nairobi Securities Exchange, whereby currently at the moment the market cap is at 3.5 trillion, and it is said if Kenya Pipeline Company is listed on the NSE, nearly 0.5 trillion, which is almost more than 500 billion, will be added into the economy. Now, this is the purpose of the government. The government essentially is a business. Whenever they buy things, they are supporting the economy, and if they feel like, okay, we have gained much more in terms of when we had initially invested, they will start offloading what they initially bought to recover the money. So the biggest participants in the forex market basically are the central bank when they purchase. Now, when you're looking at, let's say, for example, Bank of Japan, they want to offload the ETFs and rates that they have been buying for quite some time, and they are going to offload it at a small pace at the market value currently at the moment, meaning whatever they bought in 2004 through 2011 will now have appreciated in price, so they recover the money, okay? And this money will go back into the economy in terms of infrastructure and development. Now, details of ETFs and rates shall be as follows. it shall be sold at a pace of about, once again, 330 billion on the ETFs. The rates shall be sold at a pace of about 5 billion per year. Now, most of the central banks currently at the moment are offloading what they were doing. When you look at the Fed Reserve also, they are going to offload the 10-year treasury bonds that they have been investing for quite some time. Now, this is the meeting whereby it did take place. These are the policy members. These are the people essentially who did push prices on the market of Japan. Now, when you go to the economic calendar once again, I want to take you back here. As you can see currently at the moment, from 9:30, currently it's 10:17 as per the time of this recording, we do have Bank of Japan press conference. Now, they do hold these press conferences at the end of each one of its 8 scheduled policy meetings. So they do meet 8 times a year. At the press conference, the governor of the Bank of Japan communicates with media representatives and investors regarding the monetary policy. Now, the governor will talk about the factors that affect the most recent interest rate decision. Why did they hold interest rates currently at the moment? The overall economic outlook, inflation, and clues regarding future monetary policy. Now, hawkish comments tend to boost the Japanese yen, meaning it's going to be stronger, while a dovish message tends to weaken it. Now, we are going to look at, we anticipate Bank of Japan to continue increasing rates in the near future, which means we are anticipating a stronger Japanese yen in the near future. But when is what we don't know. Now, how is this information crucial to us as traders? Because if Bank of Japan, if Governor Ueda says that, okay, there's a possibility in the near future that we might see increase in interest rates, it means that we are anticipating a stronger Japanese yen. For us as traders, this means that we are going to look at more buying opportunities on the Japanese yen. Now, moving over from Asia to Britain, whereby Britain has just released their retail sales on the year-on-year release and the month-on-month release, whereby we were looking at a number. So the previous number was 0.6. It was revised down to 0. The previous number was 0.6. Currently, at the moment, it has been revised to 0.5%. Now, looking at the consensus, we were looking at 0.4%, and the actual number came out at 0.5%. Slightly better than forecast, but looking at it, seasonality speaking, it's almost equal to the previous number. Now, why is retail sales important? Now, this is directly corresponding to consumption. When you look at an economy, basically, there are two people who run an economy: buyers and sellers. So if buyers are producing, let's say, for example, when you look at it from buyers and sellers perspective, you're also looking at it on production and consumption. So the retail sales is going to look at the percentage changes reflect at the goods. So this measures the volume of goods and services by retailers in Great Britain directly to end customers. When you look at this data, so this is going to look at, let's say, for example, Rolls Royces. How are they producing? Are they selling these goods? Production is number one, selling is number two. So the goods have to be produced first. Then how do the customers react to the goods that are being produced? Let's say, for example, iPhone 17. A lot of research and development went into the product. Then when the product is released onto the consumer, how does the consumer react to it? Because once again, remember, money was used in terms of research and development to produce the product. Then you have to sell the product, you have to sell the iPhone, then the consumer gives you the money so that a lot more research and development could continue for the next iPhones to continue in the near future. So whenever we are looking at this data, technically, we are looking at fundamentals will tell you if prices are going to buy or sell, okay? Basically, that's it. If you're looking at data, especially high impact news releases, as you can see, this one is high volatility that we do anticipate on the markets. So whenever you look at this data, basically as a trader, you ask yourself, okay, if this comes out positive, does it mean I need to look at buying opportunities or selling opportunities? If it comes out negative, what is the effect that it's going to have on the markets? Now, we are going to go over into the charts in just a moment's time, but after the retail sales were released, if you click on the read official report, correct, so this is the historical data of the retail sales, but if you do click on the read official report, it's going to open a new tab whereby once again you can see this is gov.uk, meaning this is a government website that we do publish. This is the retail sales that was released at that moment in time. Now, the quantity of goods bought in terms of volume on the retail sales are estimated to have fallen by 0.1% in the 3 months to August 2025 when compared with the 3 months to May 2025. Now, there has been fall in automotive fuel and computer and telecoms equipment stores were partly offset by increases in non-store retailing and clothing stores. Now, when you look at the UK is very close to Europe. And there has been energy crisis, especially due to the fact of geopolitical tensions in between Russia and Ukraine. When you look at Russia, Russia do have a lot of resources and they do supply massive amounts of energy into Europe and the United Kingdom. Now, we have been seeing the automotive industry being hit hard, especially in Europe, whereby there has been data that was released yesterday. Ford, if you can put it into perspective, Ford did lay off almost 30,000 workers just in Europe as a result of the transitioning to the EV mandate, whereby electric cars, there is a mandate to have hybrid vehicles, a must hybrid vehicles in the next 10 years, meaning they are going to scale down on the fossil fuels. Now, when you look at this information, it's going to affect consumers because currently at the moment, people are not receiving the EV vehicles as they thought they would. Now, there is a bit of research and development currently ongoing, and as a result of this, these companies have been taking hits in terms of profits. When you look at Mercedes also did lay off a few people, Volkswagen being the biggest one, offloading massive layoffs in the company. Now, when you look at UK also, it's going to be affected because once again, these companies are correlated. When you look at UK do produce really good vehicles. When you look at McLaren, when you look at Rolls-Royce, when you look at Maserati, these are very beautiful brands that are produced and they have to sell it to other people. Remember, when you have the product, that's step number one, you have to sell these products. So if they do sell the vehicles, it means that, yeah, they have offloaded the product, then they're going to receive the money, and this money is going to pay workers. It's going to go back into the economy. Now, looking at retail sales currently at the moment, focusing on retail sales, it has they are estimated to have risen by 0.5% in August 2025, following an increase of 0.5% in July. Now, clothing stores, butchers, and bakers and non-store retailing did grow in August of 2025, which some retailers attributed to the good weather. Now, once again, seasonality speaking, currently at the moment, this is the time whereby the sun does shine at its highest point. Okay. Now, this has an impact in how people purchase goods and services. If someone was to purchase a vehicle or a home, basically moving more money, if someone was to take a mortgage, big loans, this is the time for them to take it. Why? Because of seasonality speaking. We are about to enter into winter and the markets usually have cycles. Okay. When you look at energy cycles, let's say, for example, oil prices tend to move to the upper side towards winter. Why? Because more homes are going to use the energy to heat up their homes. So supply and demand is going to be affected. Now, looking at it, and I did mention on New Zealand dollar, whereby on the 12th of this month, the New Zealand dollar did release data of, yes, we are having more tourists coming onto the country. Now, this is very important. When you look at Kenya, for example, this is the time also that the Kenyan shilling tends to strengthen, even the Tanzanian shilling. Why? Because more tourists are going to come watch the wildebeest migration. Now, remember, when tourists do travel, they do pack really good. In terms of monetary value, yeah, they are really loaded in terms of flow. Now, they have their local currency. Let's say, for example, tourists coming from the United States of America, they do use the dollar. Now, when they come over to Kenya, they have to convert the dollar into the Kenyan shilling so that they do what? They enjoy the scene. The fuel has to be bought in Kenyan shilling. The food has to be bought in Kenyan shilling. So when they convert the currency into the local currency, this in turns puts more Kenyan shilling in circulation, which in turn strengthens the economy. Now, looking at it currently at the moment, the weather has a very, very, very big impact on how money is moved. When you look at Australia mining has improved to the upper side. Why? Because towards the end of last year, they did have a lot of floods. Towards the start of the year, also, they did experience bad weather, and most of these mining was shut down. Why? Because you have to look at favorable weather. Now, whenever you look at weather has a very, 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 very big impact into how traders do buy or sell into the markets. Now, looking at it, sales volumes did remain slightly below 2025 levels, rolling 3 months, and the monthly index for the quantity bought on the retailing sector. So, looking at it seasonality speaking, we are picking to the upper side ever since the lows that were formed on December 2023. We have been seeing the economy move to the upper side. We still haven't broke the highs that was made during April of 2025, but currently at the moment we are recovering from July 2025 data, and this is what you'll want to look at in terms of, okay, in the near future. Remember, fundamental analysis is going to tell you where price is and where price should be. It's not going to tell you how it's going to reach there. This is whereby we are going to go over to the next segment, and before I do that, the commitment of traders will be updated today at exactly 10:30 in the evening, whereby it's going to be in the next 12 hours, 3 minutes, whereby I would want to look at how institutions are positioning themselves, especially coming from a lot of data that we have seen up to where we are currently at the moment. NFP numbers in the United States did come out very, very low compared to forecast. We have been seeing mixed reactions on inflationary data. Yesterday, was it yesterday? On Wednesday, we did see Federal Reserve lowering their interest rates by 25 basis points, and they did talk of, okay, we don't anticipate aggressive interest rate cuts as the markets would want to. So this information we'll want to look at, okay, how did institutions position themselves as a result of the data that was released? Now, looking at the CFTC, this is September 2nd. From 2nd of September till 9th of September, we did see institutions add more positions on gold. We did see institutions offload positions on silver, whereby they offloaded 1,903 net long positions while they added to short positions. On platinum, starting with platinum, they did sell quite a lot of platinum, and palladium, they did add slightly more compared to selling opportunities, whereby they added 790 net long positions on longs, while they did add 358 net short positions on the platinum metal. I would also want to look at currencies. Now, this information is usually updated here. Okay, so you don't have to go through the commitment of traders. As you can see, we are going to have an update on the CFTC, on the S&P 500 net positions. We are going to have an update on the oil positions, the gold positions, the British pound positions, the Japanese yen positions. We would also want to look at euro, how, especially looking at how many meetings. They have had 10 meetings up to now this year, and very, very interesting to what is happening to the euro region currently at the moment. It's not looking good, and we want to look at how institutions are positioning themselves as a result of the data. Then we are going to have Australian dollar net positions also being updated. All of these will be made available on the HFM platform at exactly 10:30, and we shall digest this data more and in depth come Monday. Now, once again, when you look at information after looking at the fundamental analysis, this is whereby we switch now to the most important segment, which is usually how do you piece this information onto the charts. Okay, so remember, once again, fundamental analysis is going to tell you if we are buying or selling, but where are you going to buy it from? Where are you going to sell it from? Where is the most likely place you're going to have a stop loss in case you're wrong? Where will you have your lowest hanging fruit in terms of your take profit? If you're buying, you will want to know, okay, this is a region that I would want to target because as a result of historical data. Now, looking at gold, very, very interesting. Ever since this was Wednesday, this particular interesting piece of price action here. Let me zoom out. I'll be looking on the 1 hour time frame. Okay, gold did make all-time highs around $3,700 an ounce come Tuesday. this was an all-time high. Then on the day whereby the Fed Reserve were to release their interest rates, we did see gold moving fast to the downside, breaking the most recent support region. We had a short-term retracement, and then when the news started to be released into the markets, we did see quite a lot of volatility in the markets, whereby the markets first moved to the upper side, grabbed this high. When I say grab, this is we do anticipate there is liquidity residing above these highs. There are willing participants who are willing to buy the markets if it breaks to the upper side, whereby the markets did tap onto that high and aggressively went to the downside. Now, very interesting thing to note is where the prices did close on that particular day. So on my chart, I do have these lines which are called session breaks, whereby they usually break down the charts into more digestible manner. I can be looking at the 30-minute time frame. Oh, this is the 30-minute. Let's switch over to the 1 hour. I can be looking at the 1 hour time frame, but I'm picturing the daily perspective in mind, whereby from this line to this line, essentially it's 24 candles, which represents 24 hours of trading, as you can see from my chart there. So this is 23. When it reaches 24, the next day is going to begin. We did have this massive 1 hour. On this 1 hour candlestick, broke to the upper side once again, moved massively to the downside, and this was the result of the Fed Chair Jerome Powell hinting that, okay, we might not see aggressive cuts as the markets initially anticipated. And he did point out that maybe this is just a risk management cut, whereby we would also want to be cautious onto oncoming data. He did point out that, yes, there have been implications of tariffs, whereby goods and services, currently at the moment, the costs are not being passed on to the consumers, and they are being taken up by the importers. And he did mention about maybe in the near future, these costs now will start being passed on to the consumers. But currently at the moment, he was slightly positive about the economic outlook. Prices closed well below the opening price of that specific day. Now, come Thursday, prices opened around this region, moved to the downside, upper side, but once again, prices did close well below the opening price of yesterday's candle. Now, looking at it today in the morning, we did have some bullish opportunities that did present itself during Asian session, but at the moment we did at exactly Frankfurt Open, which is 8 a.m. local time, Nairobi time, we did see bears coming into the markets, whereby we did see two candlesticks that provided signs of bears still pushing this market to the downside. Now, currently at the moment, we are at a very interesting region of support, forming around $3,627 an ounce on gold. Now, today you have to be very careful. Why? Because this is the final trading day of the weekly candle, meaning there could be a high likelihood of volatility towards New York session, as institutions will want to start covering their positions from when they did begin. Now, looking at it on Monday, so this was Monday, Tuesday, Wednesday, Thursday, Friday. Currently at the moment, prices are trading nearly to the opening price of Monday's. This candlestick here does represent Monday's opening price, and we'll want to look at how the candlestick will close after today's closing price. We still have quite a few hours remaining on the daily candle for it to close, and once again, you'll want to be very careful, it being a Friday. That is going to be it on gold. Looking at silver, very interesting, whereby we did see massive selling on that particular Wednesday, whereby ever since Asian session did begin, prices of silver tanked to the downside almost 3.45, more than 3.55% in less than 10 hours of trading on the silver metal, coming from highs that it did make around $42.9 an ounce on the silver metal. Currently looking at it on the moment, once again, similar. Ever since Asian session, prices did open, move to the upper side, but we're going to look at how prices are going to close towards the end of the day. Currently, at the moment, we are trading exactly on the opening price of Monday, which is this specific candlestick here. And we will want to note the opening price and the closing price. Wherever someone closes their markets, it's very important to us traders. Why? Because that is the place whereby the markets do finalize on. If institutions wanted to drive prices, the closing prices usually show us where they would want to position themselves as a result of the closing price. Very interesting thing to note. Now, looking at it, we still have a few hours remaining for the weekly candlestick to close. But once again, today is going to be a Friday. You'll want to be very careful about the charts. Looking at Euro USD, the Euro against the dollar, we have been seeing a lot of news releases. And looking at this specific candlestick here, this was when the ECB President Christine Lagarde was having her speech, whereby she did hint that, okay, there is financial risks currently at the moment of the euro, especially looking at France, whereby they just dissolved government recently, and then they appointed President Macron appointed a new prime minister onto the seat. So we'll want to look at how the euro, after that speech, the euro did gain quite interesting against the dollar, almost 1.66% in less than 78 hours. But when the Fed chair did release his speech and the interest rates were released onto the markets, we did see prices moving fast to the upper side. Currently, at the moment, we are breaking the most recent structure that was formed around this region, closing well below that particular point when prices did open. Looking at it on the closing prices of the past 2 days, whereby prices have been closing well below the opening price after the Fed chair did release a speech. Once again, today is going to be a Friday. You'll want to be very careful, especially heading into New York session. Now, I do have a lot of pairs on my charts. I would want you to engage with me. What are some of the assets that you'd want me to look into? We have looked at gold, silver, euro, dollar. I would want you to engage with me. What are some of the assets that you would want me to look into? Now, for the last quarter of 2025, once again, we are celebrating 15 years of providing the best services, the best platform. We are the best broker in the world currently at the moment, and there are a lot of surprises which will come your way. Make sure to follow all of our platforms, hit a like, share for big things that are going to come up next. Now, NFP is just around the corner, which we do have something also in plan for you, the traders. Now, we do have classes, Westlands, Oval Office, 5th floor, just off Ring Road, every day at 11 a.m. till 1 p.m. And then I do have also online classes that I do host daily, Monday to Friday, from 3 p.m. till 4 p.m. Make sure to subscribe. Make sure to hit that like button. Engage with me. I would want us to look at more and more assets compared to what I'm having on my chart here. And let's see on IG. Do we have any question? Morikei, thanks for being the first one to join. Mr. Njogu. Thoughts on GJ? British pound against Japanese yen. That's a very beautiful asset. GBP, JPY. So let's start on a higher perspective, going down to a lower time frame. Very choppy. You can see price action has been very choppy ever since 20th of August. But very interesting to note what has been happening of late. We were anticipating weaknesses in the British region as a result of the data that has been coming out negative. And we do anticipate Bank of Japan to increase interest rates in the near future. So today, they have hold rates, okay? For today, they have hold rates. But in the near future, we do anticipate them to increase rates, meaning we do anticipate a stronger Japanese yen in the recent few trading sessions to come. It may not happen today or tomorrow, but in the near future, we do anticipate a stronger Japanese yen. Now, looking at it currently at the moment, ever since the week did begin, so this was the opening price. Prices did consolidate up around that region. We did have signs of buyers towards the end of Wednesday, whereby we did have the Fed chair Jerome Powell speech. Prices did shoot to the upper side, but ever since that day, ever since yesterday, New York session, prices have been tanking to the downside, and this could be as a result of the data. Now, once again, ever since Asian session did begin today, we have been seeing massive bears coming into the markets. Could this continue? If we do close well below this region, there's a high possibility prices will continue moving further to the downside. But once again, today is a Friday, you'll want to be very careful. Austin, for you, what are you buying? On the commitment of traders data, who do we follow? Are there any questions on EA? East Africa. So on the commitment of traders, whom do you follow? So once again, our platform makes it easier for you to understand, okay? It digests the data for you, but technically you'll be looking at let me just open on metals. You want to focus on managed money when you're looking at commodities, okay? So these are the people tasked with us. These are the biggest speculators. If you look at it on palladium, these are only 33 traders. If you look at it on gold, it's usually less than 100 traders. So on gold, we only have 106 traders on managed money buying the precious metal, okay? And if you look at it, we have a net long of 198,000 net long positions and 35,338 net short positions. But on currencies, if you go to financials and click on the long format, you do have the dealers, the asset managers, the leveraged funds, and other reportables. So you'll want to focus on the asset managers and the institutions. So these are the people that you'll want to follow. But once again, our platform makes it easier for you to understand because it's usually updated. If I can go back to, let's say, last week. As you can see here, it's usually updated for you. So you can see the previous number and then the current updated value. So let's say, for example, on oil, the previous value was 102.4K. The data that came out last week was 81.8K. So it's going to digest it for you much better. Looking at gold. So let's look at gold. Where's gold? Okay, so this is gold, whereby the previous number was 249K. And then we did see 261K, meaning institutions did buy more. So that's how you digest the data. Time frame alignments. If I get my bias, this is from Yegon Ronald. If I get my bias and draw on liquidity on the daily time frame, I feel like I'm doing too much. Which ones should I focus on? Okay, so this is why I do have classes, and part of my classes are usually it's part of psychology, whereby sometimes we might have analysis paralysis, whereby you're drawing on too much information and you need to scale down on what you're looking at. Let's say, for example, if you get your bias and draw liquidity on the daily time frame, focus on that. If your strategy tells you to look at the daily time frame, highlight the highs and lows, just focus on that, okay? Don't feel like you're doing too much. Sometimes pulling the trigger is very difficult, but the more you pull the trigger, the more you're going to understand how the strategy performs. UJ, I think we have talked of USD JPY. I do believe we have analyzed USD JPY. Have we? Okay, dollar yen, ever since Wednesday, once again, after the speech, the dollar did gain some strength, but today in the morning, as a result of the data that did come from Japan, we did see a bit of strength in the yen, but currently at the moment, the markets are giving back. We do have a 3 candlestick chart pattern forming at the moment, whereby we did have this bearish candle, a doji, then a bullish engulfing candlestick that we did see completely engulf. Now, looking at it, very interesting. I like this price action so much, whereby if you see candlesticks that don't have wicks to the upper side, it means that in the near future, prices could gravitate towards those regions because these are inefficiencies that the markets did have left behind in the markets. Thoughts on US oil? Now, US oil, very interesting. That's a good question. On US oil, currently at the moment, it is tanking into the downside. Now, OPEC did release quite a significant amount of reserves into the markets, stabilizing oil prices. That's what we saw happen in the past 2 weeks. But recently, we did have tensions escalate in the Middle East, whereby Israel did bomb Qatar. And Qatar is a strong ally of the United States. And Israel also is an ally of the United States. We'll want to look at geopolitical tensions moving forward. This week on Wednesday, yeah, it was this week on Wednesday. This week on Wednesday, we did have 8 drones being sent from Ukraine into Russia, and they bombed the third largest refinery of Russia, whereby they do produce more than $355,000 a barrel, 355,000 barrels of crude oil a day. Quite interesting, quite interesting. And we'll want to look at how that is going to affect. So whenever you're looking at oil, focus more on supply and demand, because technically that's what is going to affect prices of US oil. Now, looking at it, the main focus is the Middle East and Russia-Ukraine war. Whatever developments happens on those countries. No, my screen is not still on GG. Okay. Mr. Hesbon, glad to see you in Nairobi. I shall see you in the next few minutes, I do believe so. That's going to be it for me. Do you have any other questions on... Okay, we don't have any questions on here. I shall see you in the next segment, which is going to be on Monday. Take care of yourself. Once again, it is a Friday. Risk management. Number one goal of a trader, capital preservation. Always ensure that at the end of the day, you do have an account. Okay, I shall see you in Monday. Take care of yourself. May God protect you. May your enemies respect you. May death neglect you and your families. Peace.